All right, welcome back to another episode of Small Business Chronicles. I'm your co-host Brian Stone, and this is the unscripted podcast that serves as a Swiss Army knife for many solopreneurs that listen to our show. And we cover a ton of topics. I mean, we've gone over networking, finances, sales, prepping a business for sale, you name it. And today we're actually joined by a seasoned fractional CFO with over 20 years of leadership experience across lots of different industries. He actually goes by Dan the CFO. Dan, I'm really excited to have a conversation about something that's not usually exciting, which is finances. So how are you, Dan? Welcome to the show.
I'm great. Thanks for having me. I appreciate it.
Yeah. So tell me a little bit about, why our listeners should be so excited about our conversation. I'm excited because I get to see all the stuff beforehand and we chat before the show, but I always like to start with giving you an opportunity to say why you are so credible in the field that you're in.
Yeah. So maybe I can best illustrate that by telling a little bit about how I got to where I am today. So Perfect. I graduated from college and I went and got a consulting job. I worked in operating consulting. I was a throughput expert. We worked on productivity, usually in manufacturing facilities, but we helped them do whatever they did better. And through that, I really became to understand and better understand the importance of data and the importance of data in making decisions. And from there, I'm like, okay, I did consulting for a while, but 100% travel wasn't jiving with my wife. So after about 4 or 5 years, we decided, okay, it's time to come home. So I came home and I went back and got my MBA in finance, and I went into finance and I started doing budgeting, and I've been doing budgeting for 25 years now. And I worked in large corporations, 300 million plus, and I was doing over 300 budgets a year. And it's not something that lights a lot of people up when you work in corporate America. But, when you get into small business, it's something that's really essential. So after I left corporate America, I started a little passion project of mine doing personal financial coaching. I helped individuals manage their money. I think so many people in my generation, they really struggle. They live paycheck to paycheck, and they never really learn the skills that they need just to survive day to day in basic personal finance. But in doing that, I learned that a lot of entrepreneurs and solopreneurs are the exact same way. They don't know how to manage money in their real life. They don't manage their money real well in their business. And they are really good at what they do. They may be really good at what they do, but it's critical that they understand the money that's coming in, the money that's going out, the true cost of running their business in order for that business to succeed in the long run, in order to have that data to make the right decisions for them to go forward.
I mean, that's a huge gap. I mean, I can speak from personal experience that, what makes you a good real estate agent, what makes you a good, HVAC installer or lawn care guy. I mean, you name the business. What makes you good at what you do doesn't necessarily translate to all of the operations of the financials of a business, right?
Yeah, so, I have a client. I have a client who he's a plumber, and when he came to me, he goes, Dan, I've been a plumber for 20 years, and both of my boys are in the business. I've got 2 different divisions, if you will, and I've been in the business. I've grown the business. I have over $4 million a year in revenue, and I have never really been profitable. I borrow money to help pay my bills, to cover payroll, and he's just been able to accumulate the debt because his revenue has been growing and growing and growing. And but then I asked the question, well, have you ever done a budget? It's like, well, no, I've never done any of that. So he's very good at what he does, in his trade. But this is just when you become a business owner, you very quickly learn that now you're the CFO and you're the COO and you're the CMO and you're the COO, and you don't necessarily have all of those skill sets. He's a really good plumber. He hasn't really had to do a lot of marketing because of word of mouth and stuff like that. But he doesn't have that financial acumen that he needed in order to figure out what's wrong. It's not that he didn't have the motivation to be profitable and to be a better steward of the money. He just didn't have the education and the ability to do so.
Well, and I think most people default to whatever they're comfortable with and what their skill set is, right? So if you're a great plumber, then your solution, if you're in a financial position, is to go do more jobs, right?
Yep.
Yeah, to work more and that's most people's solution to solving a financial issue within business from what I've experienced and seen. I'm sure you've seen the same thing is,
Sure.
well, I'm just going to throw more sales at it. I'm just going to throw more sales at it. And while that can be a short-term solution to keep you in business, it's not a good strategy long-term, right?
Yeah.
And I love that you provide an opportunity for people to have a CFO that don't necessarily have the level of corporate infrastructure to where they feel like they can bring on a full-time CFO.
I set up my business the way I set it up for a couple of reasons. One, exactly as you said, most companies cannot afford full-time financial management to run their company. There's a million other priorities that come ahead of that. So having a part-time resource is outstanding. But I also go by Dan the CFO for the very reason that I don't use a lot of jargon. A lot of people get confused. You mentioned that a lot of people who own businesses, they'll watch their bank account, and when their bank account gets low, they'll go out and they'll sell something, right? It'll fill their bank account back up, and then it'll come back down, and they'll go sell something again. And that's the common reaction. But I think a lot of people deep down, they get scared because they look at their bank account and they don't have the money to make the payroll or to pay the rent or to cover different bills, and they don't know how to get around that, so they just kind of ignore it. And revenue cures a lot of evils, right? So you can go out and you can sell something to cover that short-term bill, you've solved your short-term issue, but you haven't really addressed your longer-term problem.
Yeah, I mean, that leaves you in a position where you're one sale away from not making your payroll, right?
Yeah. And that's why 83% of businesses go out of business in the first 5 years.
100%. Yeah. And that's even with a lot of them not paying themselves appropriately or charging what they're worth. Right.
Yeah.
I think there's
a lot of clients I have, they come to me because they feel like they're spinning their wheels. And because of that, I'm working harder now than I ever have. My revenue is higher now than it ever has. And I'm just not getting anything out of the business. I'm not getting paid. And if they have employees, their employees might be getting paid, barely, but they're not getting paid. Or if they're a solopreneur, I'm doing all this work, I'm putting in all this effort, but I'm not seeing any money come out of it.
How much of that has come from the economic shifts and let's be honest, I mean, employment and salaries being a lot higher just in the past, 3 years than what they were? Are you seeing that is a lot of the spark for new problems for business owners that have been in operation for a long time?
Well, it can be. Clearly, anybody who goes to the grocery store knows that everything costs more now. I mean, the inflation hiccup we had over the last 3 years, everything costs more. And if you are in a service industry, or quite frankly, even if you're in a manufacturing industry, but if you have your service priced at a certain level and it's the same level that it was in 2000, you are making less money today than you were then. Your prices have to adjust with the increase in cost of living. It all really depends on your business. There's two ways to become profitable, right? It's to manage your pricing and your revenue, but also to manage your expenses as well. And if you've got a way to become more efficient, more productive, and lower your cost, that's another way. Some people might say, I can't raise my prices. I'm already at I'm a premium in my market and I can't raise my prices. There's no wiggle room there. Well, then we need to find a way to become more effective on the cost side. In delivering whatever goods or service or product that they're providing.
Well, and I talk about this a lot. We actually had our goal planning session for my business in the past couple of months, and we talked about the concept of having to over-earn your expenses, right?
Sure.
Because of taxes, right?
Yeah.
And I think that's a lot of people don't think about, right? So it's not just
Absolutely.
dollar per dollar. I don't just have to go earn $1 for every $1 that I spend. I also have to pay Uncle Sam, right?
Yep.
And so maybe that's $1.30 that I have to earn to replace that $1 of expenses.
Yeah,
so I think that's a concept that's foreign to a lot of people,
and it's frustrating too for business owners because they finally make it, or they feel like they're finally making it, right? I started my business. I didn't make any money last year, but this year I had a really, really good year. And they go see their bookkeeper or their accountant, and they're like, "Hey, congratulations! You made $200,000 this year. you owe the IRS $70,000 and you got $3,000 in your bank account, right? There's no planning around that. So cash flow management is critical. Taxes are brutal. I don't care who you are or what tax rate you're in. Taxes take a big chunk out of your business, and you really do have to plan for them.
Well, and I think that some people go too far, right? If you don't have a CFO or someone that is on more on the consulting side, and you're simply just using a CPA or a bookkeeper that's only just claiming as much as you possibly can. I've seen it happen where business owners set themselves up to where they can't get a loan, or they can't even for a personal home or something, because they've on paper they look like they're not profitable, right?
Yeah, and that's important in the whole planning process, Brian. So a lot of people don't understand the difference between accounting and finance. So let me start with that, and I'll talk a little bit about how I do planning and how that actually kind of works in the budgets. So there's a difference between accounting and finance. Accounting is simply making sure the right expenses and revenue get into the right accounts in your bookkeeping. And we want that because we want to have an accurate reflection of the revenue that we're generating, the expenses that we're doing. And quite frankly, if you manage your business based on data, you want to have consistency over time. And that's what a good bookkeeper and accountant will give you over time. Finance takes the output from the bookkeepers. Your bookkeeper will generate an income statement or a profit and loss statement or a P&L. It's all the same thing. And balance sheets and statement of cash flows, which will tell you how you're running your business, but not every business owner can actually read that and understand what it's telling them. And so what's important for me is to make sure that a business owner has a good bookkeeper in place. And sometimes they do it themselves, and sometimes it's a family member, and sometimes it's outsourced. As long as they're doing a good job, that's all that's really important to me. But where I really provide value is taking the data from those financial statements. Now, when I meet with my clients, there's two situations, right? There's situation A, this is where I am today. And either I'm working harder than ever and I'm spinning my wheels, or I just don't have any cash flow, or I'm really succeeding and I want to expand, but I don't know what that looks like. We know where we are today, but I really kind of try to figure out where do we want to be in the future. And that's different for everybody. Some people want to sell their business in 3 to 5 years. Some people want to be able to turn their business over to their family members. Some businesses want to I just want to maintain where I'm at and provide myself and my family a good living over the next period of time. What's important is really to get clarity on where we want to be. And then the tool or the magic that ties those two together are budgets. And sometimes it's an annual budget, sometimes it's a 5-year budget or 10-year budget. But what do we need to do? What's the first thing we need to do today to get from where we are today to where we need to go, or in the future? So what we'll do is we'll create a budget. So we need to generate this much revenue in order to do that. Well, okay, what do we need to generate that revenue? Is that realistic? Do we need marketing expenses? Do we have cost of goods sold? Do we have enough space? Do we need to change our rent? What does that look like? And we build a really solid 1-year plan, typically. We might forecast further out than that. But what the real magic isn't just creating the plan. Most people will do a budget and they'll put it in a drawer, or they'll close the file and they won't look at it anymore. Where I provide value as a financial expert is I will look at the end of January, I'm going to look at your budget and say, this is what we said we were going to do. And this is what we actually did. And the real magic is identifying where the variances are. Did we achieve the revenue that we thought we did? Yes or no? If not, why? Where were we short? When we look at our expenses, did we spend similarly to what we thought we were going to? Where were we off? Where did we spend a lot more? When did we spend a lot less? And why did we do that? And how is that jeopardizing us from keeping us on our track? What do we need to do in our business to make our financials more aligned with our budget going forward? And if we can get back on track, that's great. You're back on your budget. If not, then we need to reforecast and say what the rest of the year might look like based on these new variables, because things change, right? I mean, typically I work with my clients to do budgets in Q4, but in August of September of this coming year, the information that I'm going to have is going to be a lot different than what I have right now.
Yeah.
And anybody who's went through inflation the last 3 years know that things change pretty quick.
Well, and I think one of the most valuable exercises I went through is to actually look backwards, right, and to use data to make those decisions and play what red light, yellow light, green light, right? And
Sure.
I'll never forget when I found, this was coming into about 2 years ago. I found an additional $4,000 that was just being thrown away into marketing, and I changed the service provider that was doing that for my company, and we had a better result with vastly different cost, And I think most owners look at the number at the end of the quarter or at the end of the year, and they don't look at how it gets there, right?
Right.
And the reconciliation process is just to make sure everything is done and their
Yeah,
invoices got
it's
paid.
not. It's not.
Right?
I'm running my business really well. It's just making sure I'm getting the right expenses in the right account.
Yeah. It's basically, hey, am I ready for tax season? And has everybody paid me what they're supposed to pay me? That's what most people look at. They don't really dive into any deeper than that. So
Right. Yeah, and I can give your listeners some tips. Today's tips are a little bit different than what they were 20 years ago. Software subscriptions. People go online, they see something that might add to their value to the business, and they add all these software subscriptions. Sit down and look at what you spent the last quarter. Look at the detail under software or apps, and you'll find that there's probably something in there that you haven't used yet. Or maybe you got it and then you just have never used it, or you used it 6 months ago and you never canceled it. That's just money that's just being consumed by your business. That I'm all about apps and tools and software, as long as you're using it and it's providing value to your business. But otherwise, it's just an expense that's eating away your profitability.
Well, I just found one actually this morning. I saw a charge come through, and it was $15, and it was an application that I did a trial for, opted not to use, and canceled it. Pretty sure I canceled it, but here it is months later, and now it's charging 15, and that's $15, right? But think about if I wasn't looking. I know for my personal, and everybody hates notifications, but I have every charge notification on when it comes to finances, so that if I miss something, it's not for more than 30 days. Right.
Yeah. And I actually have the same thing as well. So I do all of my banking online, and my banking has an app where anytime money comes in or comes out of my account, I get a notification. And that's a good way to just kind of keep an eye on things. I mentioned the software thing because I was just talking to one of my clients last week. We were looking at the last year. She literally had like 60 different software items in her software category. Dues and subscriptions is another one. I mean, that's similar to software, but when you subscribe to different things, they auto renew typically, and that's something that you want to watch for.
Well, and some of them I've fallen for the annual discount trap. You know what I mean? Where it would normally be, $300 for the year, and it's down to $250 if I go ahead and pay it all up front and pay it annually, right?
Yep.
And that's a nice idea if it's a proven system that works. But I've had it happen multiple times now where I buy this annual subscription, and then 3 to 4, maybe 6 months in, I decide that, hey, we go a different direction. It's not a fit for my business anymore. And now that money I saved is actually a loss because of the difference.
Yeah, because you have it for another 7 or 8 months, and you're not going to use it all, and then you have the potential of it auto renewing, a year later, and it may not even be on your radar. So that's very, very common.
What other tips are common that you see for in particular like solopreneurs and people that are out working in the field and not at a desk all day?
So I think there's a couple different ways I can answer this question. I think the biggest value that I can give to solopreneurs is to create a plan and then compare your results to that plan every month, just to see where you're on track or you're off track. Now, budgeting can be a little intimidating to some people because, quite frankly, not everybody's numbers people. They're not numbers people, and that's fine. That's just the way everybody's wired a little bit differently. But if you're going to create a budget, that would be the next thing I would highly recommend. If you're not doing it already, just take some time away from the business if you can, and think, okay, what services do I offer? And list all of those different services that you offer, all the different products that you offer, and then say, okay, how many do I think I'm going to sell? What's the pricing on them? Is the price correct? And just kind of work your way through the P&L. Get really clear on what you provide and what you charge for that, and then understand, what does it cost you to provide that good or service? And then what you're effectively doing then is you're looking at your revenue and your cost of goods sold, your cost of sales. What's left after that is something called gross profit. And that's really the revenue that is left over after you paid everything to fulfill your product or service. What's below that is what's called fixed costs, your rent, maybe if you have some type of liability insurance with your business, office supplies, stuff like that. There's costs that aren't necessarily attributable to a specific job that you do have to account for. But also, don't forget about profit. Build profit in there for you as well as the tax that you need to spend. If you put together a budget and you say, okay, this is what I think I'm going to sell, and this is how much I'm going to sell it for, and this is how much it's going to cost me to provide my goods and services, and here are my other expenses. If you take your revenue and you subtract out all those expenses and there isn't any money down at the bottom, you need to really kind of relook at your budget and figure out, how do I modify this? How do I modify my business so that I can actually get something out of it? And it may mean that you have to drop a service that has a lower margin or not as profitable as other services.
What do you see as kind of the gold standard? Because I know it's all subjective as far as how, and I always have, heard the 30-40-30 rule, like 30% profit, 40% expenses, and 30% for taxes. Do you find that to be generally true, or is it all across the board based on the industry?
Generally true, but it is really kind of across the board. The reason I say that is, I have a client, I mentioned earlier, I have a client who's a plumber, right? And there are definitely hard costs associated. He's a commercial plumber. So there's hard costs with his labor and the materials, and sometimes subcontractors. They certainly have an office and trucks and stuff like that. So their margin, I recommend typically for my clients to have a profit somewhere in the 20 to 30% range. And of that, you're probably going to pay, 30% of that in taxes, maybe 35% in taxes. If you own a company, I've got a client who she's in PR, and she does public relations for authors of books, and she gets them on nationally televised shows and stuff like that. Now, her overhead isn't very high, So if you're in an industry where you provide a lot of consulting, or the labor is basically you, there's not a lot of cost, your profitability could be higher than that. If you are an online e-commerce store and there's not a lot of margin, if you're selling things that are typically commodities, there may not be a lot of margin there if you don't have a tremendous amount of volume. But even if you have the volume, a larger volume will help make your fixed costs a little bit smaller as a percentage of revenue. But if your volume's not there may be a smaller percentage on that bottom line. I usually try to have my clients, I aim for 20, 30% worth of profit, and just kind of go from there. And if we're underperforming, I worked with a fertility doctor. He was doing 55% profitability in months. Yeah, he had a very extremely profitable business. But he had
mine on the real estate business side of things floats at around 40 to 45.
Yeah.
Right.
Yeah.
But again, it's more, higher cost of sale, and less fixed, so it's totally different industry.
Yeah. And every industry is a little different. So I usually say, 20 to 30% is kind of like my guideline typically. But when I look at my clients, we look at every business independent of each other and really try to figure out what makes sense.
Awesome. Well, Dan, I really enjoyed the conversation, and I know we could talk numbers all day long
Yeah.
because I
Scary, huh?
I dig data. Yeah, well, I mean, and most people they view talking to a CFO or talking finance kind of like going to a doctor for a physical. It's like, oh, I have to
Yeah.
do it, but it's not pleasant, right? But once you figure out that it's the key to unlocking growth within your business, it gets really exciting, right?
Yeah.
And so I know that you've seen that in the clients that you serve, and you offer an opportunity for people to do a consultation and kind of an exploratory process with you. Is that
Yeah,
correct?
sure. Yeah. So all you need to do is go to my website, danthecfo.com. Again, I try to keep it simple. There's a schedule a strategy session button, couple buttons on my homepage. All you need to go out there is click on there, put in your name. It'll give you a time. You can choose a time. And I don't do high pressure sales. I mean, I just want to help people. So we'll get on the call for about a half hour. I'm going to learn a little bit about your business. I'll give you some advice, much like we had on this podcast today, about things I would recommend that we do. And if we're a fit, we're a fit. If we're not a fit, we're not a fit. I'm completely good with that. I just there are too many small businesses in this country that just don't make it. And to me, finance comes easy, and I know that's not for everybody. And if I can help some of those businesses survive and thrive, then that's really what I'm here for to do.
Awesome. Well, Dan, I really appreciate the conversation again. And thank you guys for listening and tuning in to another episode for Small Business Chronicles with our guest, Dan, the CFO. And like I mentioned, if you find this valuable, check Dan out. Check out his site. Also, feel free to subscribe to this show if you haven't already done so. Rate us, leave us a review, all of that good stuff. And stay tuned for more unscripted conversations covering all different kinds of topics to support entrepreneurs like yourself. So until next time, this is Brian Stone signing off for Small Business Chronicles. Thanks, Dan.